Welcome back. You're watching Stockwatch with me, Simon Brown. Joining me to take your stock-related questions tonight, Drikus Combrinck from Capicraft and Wayne McCurrie from FNB Wealth and Investments. Send your questions, email stockwatch@bdtv.co.za or via SMS 41392 or on X using the hashtag Stockwatch. Gents, thanks for joining me both. So the big news is China and their stimulus package, which I chatted with someone earlier today. He said it's potentially the biggest we've ever seen, although we haven't quite seen all the T's and C's. Drikus, the market seems to think this is a fundamental game changer. Certainly China stocks, Naspers, Process, Richemont doing well. Your take on China broadly and this stimulus package?
Well, let's start with what the problem in China is. It's a balance sheet recession, basically, that they're in. Balance sheet recessions take a lot of time to sort out. The problem isn't at the central government level. Neither is it on consumer level. It's at the municipal level, in the districts. So one of the measures that they've announced is that basically the central government is backstopping at a 2% interest rate, which is where the bonds are trading at. The Chinese bonds are trading at, government bonds, and they're backstopping basically those municipal governments with the balance sheet problems. They're backstopping them, guaranteeing the underlying bonds, allowing those municipalities to buy vacated or open residential space. So they're going to buy properties. That's going to alleviate a lot of the balance sheet pressure of the consumer, which is not really the problem. But I think it addresses a lot of the municipal problems. I think they would have liked to do this a long time ago, and I think that one measure is the most important one. How much they actually spend, we don't know. That is the big question mark around this. Sure, there's a few basis points lower on reserve requirement ratio. There's a deposit ratio is down from 25 to 50. Those help, but those are at the margin. And those don't really move the needle, in my opinion. That doesn't solve the balance sheet problems. But that one measure, where they backstop the local governments to go and buy property, I think that's a big one.
Is Drikus staying with you for a moment? I mean, some folks say China is not investable. Some say it's selective. Your take on it? I mean, is China a case of pick and choose and be careful?
Well, I think sentiment is as bad as it gets. Valuations are quite cheap, but I think most people think it's uninvestable because they got really hit by the confiscation, basically, of the Russian investments, the delisting or of the Russians. So there's always a chance that happens again when there's some kind of confrontation between the Chinese and the US, which is quite likely over the next few decades. Who knows? But I think that is one reason that's been put forward. And I would just like to, put it out that if that happens, they must remember that, most of Max 7's semiconductors, just happens offshore from China and Taiwan, and secondly is a lot of the components that a lot of the Max 7 uses, like, Apple iPhones, also get manufactured in mainland China. So, if you're going to put forward that argument, just don't buy most of the stuff that's listed on a NASDAQ as well.
I take your point in it. Wayne, the China story, and it's early days and there's a lot to it. Could this feed through to commodities? Because you and I have spoken a number of times around commodities, and let's park gold aside for now, it's at the highs. Could this, in your sense, create some proper stimulus, some commodity demand? Because that's certainly what the market is thinking today.
Well, that's clearly what the market's thinking. Look, I think it will over time. As soon as there's some alleviation on the balance sheet pressure on the debt and the property debt, and Drikus explained it very, very well, then people will start to spend more. And if there's more residential, more buildings being built, residential and commercial, that will increase the commodity demand. So I think we're in a very normal cycle. Obviously, China, I've stated for a long time now that I think that this is cyclical, not a structural problem. It's nothing like the debt Japan got into in the late 1980s. The Chinese banking system doesn't seem overburdened with too much debt that the stimulation package can't actually sort out. And the market's been waiting for it, and it came today, and we've seen the result. I mean, some of the commodity shares are the best performers on the market. I don't think China is uninvestable. I think the shares are very cheap. It's just gone through a downturn. In a downturn, you never hear good news. But that can change, and hopefully it is changing now, and the Chinese shares may well do quite well.
Let's stay with you, Wayne. The rand, we spoke last week Friday, it was 17.50. It's now 17.20. I got two questions coming through. The one says, should I be bringing dollars back into ZAR? The second is, should I be taking ZAR off? I know you said last week 16.80 was the level you were watching.
Yeah, I mean, who knows what the level is, but I don't think it's 17.20. To bring money back now, okay, let's put it this way. Fair value, and I mean, I've maintained this for a very long time now, and sounded very stupid when I said it, over the time, that fair value is 17.50. Now, the rand will probably strengthen below that. So it's already below that. I mean, it's at 17.20. So you are maybe, I mean, it's come from 1930. We forget this, eh?
Yeah.
To bring money back now, you're a little late, quite frankly. So I certainly wouldn't bring money back now. And it's purely my guess that at 16.80, I would start to take money overseas. I mean, that's just purely my guess. I'm not even saying it will get there. Maybe if you want to take money overseas and you were lucky to have rand assets in the last 6 months, because rand assets have outperformed in dollar terms, quite nicely over the last 6 months, and you want to take money overseas, why not start small now and take money overseas? But I think the real point to make is, at some stage in the near future, it almost seems like now, you would want to take money overseas, and really quite material amounts of money. The rand, I mean, who knows where the rand could go to? It could go to 16.50. I don't know. But it's during the strengthening phase that you must take money overseas. Most people speak to take money overseas when it's 19.30 and they're panicking. This is now the stage you must consider taking money overseas.
Yeah, we panic, as you say, 19 plus, we all rush out, now we're 17 and we don't. Drikus, how do you look at the rand and play it? I do it very old school. I take money over on clockwork, and when it strengthens, I try to take more. Do you bring back? Do you just take always? Do you look for levels?
No, we look for levels. I mean, but it depends on, what your exposure is. What's your strategic asset allocation? If you've got a 50%, let's say, offshore strategic allocation, and you're only sitting at 10%, use this bit of strength and take a bit out. It all depends on, what your exposure is at the moment. If you've made a lot of money, offshore over the last few years, like a lot of clients have, I suppose, of most SA clients have done well offshore. Mm-hmm. It's you might even think of still bringing back at these levels. Now, I do think the rand is technically overbought. We might see a pullback back to 17.70, something like that. Quite possible, it's only a technical, but I think the rand was at 13.50 back in 2021. Inflation between us and the US isn't much different. Cumulative inflation since then hasn't been quite different since then. Yes, they're sitting at a bit of a lower level at the moment, but I do see real rates being much higher going forward in SA than in the US, and I do think the rand, or even growth prospects, looking better over the next, say, 12 to 24 months locally than offshore. And I do think this is more of a dollar weakness story. It's not a GNU story necessarily. That helps. The GNU holds, but I do think a lot of money will be returning to EM. It's already done so the last few weeks, and I think it will continue to do so over the next 6 to 18 months. And then you might see the rand deep into the 16.15 territory to the US dollar. But it's not a SA story. It's a much bigger story behind that.
Yeah. And we want to take the credit for it, but I take your point 100%. Drikus, next day for you, a question coming through on the SMS. Is it time to sell Thungela and Exara? If you were still holding, would you be a seller, or are you a buyer at these price points?
It's difficult with Exara because they hold a big stake in Sishen Iron Ore, which contributes about most of market cap. I think if you subtract the imputed value of Sishen Iron Ore, you can do that by just, calculating what the market values it through Kumba Iron Ore, and you subtract that, you're basically buying the coal assets for next to nothing, if not getting it for free sometimes. So I do think Exxaro is a great play. If you catch it correctly, you can short out Kumba and get the basically the coal assets which are great coal assets, long life. Tungela, the other side has got a great operating free cash flow at the moment, but they need to reinvest a lot back into their mines. Life of mines are quite short, so even though they're generating a lot of cash, even at these prices, you will not see a lot of those going forward. But still, sitting on a good dividend yield, I think they will continue to add value back to shareholders. I won't be selling any one of those, and I think they offer some value at these levels.
When we know that you like commodities, does that extend to coal as well, Exxaro and Thungela?
I think so, yes. I mean, coal, as we all know, the demand for coal is in a steady decline, but it's probably declining at a slower pace than what new supply is coming on stream. So, in the shorter term, 2 to 3 years, the coal outlook doesn't look bad at all. I don't really like the single commodity plays. So, I mean, I'd rather go for the diversified companies, Anglos, BHP, etc., rather than the single commodity plays. So, I mean, today's good news for commodity shares.
Yeah, and we'll take it. Drikus, question coming through about Redefine. Properties had a good almost 12 months now since the lows of last year. Would Redefine be on your shopping list?
I don't like the two big ones. Some of them have got a little bit of too much office exposure. Redefine Growth Point, not on my buying list. We've been buying Burstone. I think Burstone is excellent value. They've doing a bit of corporate restructuring. They're going to manage a lot of properties going forward, so a bit less, bit more asset light, if you'd like. So you've got basically a property manager, asset manager, plus the old REIT structure in there, and they've sold a bit of the European REIT off to Blackstone. I think which is a great transaction for them. Yeah, I think there's other options there. You don't need to buy Growthpoint to Redefine necessarily. There's a lot of other options in the market.
Your take on Redefine? I take Drikus's point. It and Growthpoint are almost too big in a sense, and a lot of office. Redefine for you?
I don't mind the big diversified ones. I mean, certainly when I go back to the office, there's no parking available there. So lots of people are back in the office, and I think that trend will continue. So I quite like the big diversified ones, and I think there is still some upside.
Let's go offshore. We've got a question coming through around Estee Lauder. Certainly it's a stock that pops up in my inbox from time to time. Wayne, Estee Lauder, I mean, it's the classic, if you're feeling a bit better, maybe more being spent on beauty?
I think so as well, yeah. Look, I mean, obviously lower interest rates is going to assist all consumers, and the direct consumer-facing stocks I think it's probably going to be quite a big beneficiary of a better consumer environment over the next year or two.
Sure. I hadn't seen that chart now, but off a third. Drikus, your take on Estee Lauder?
I don't follow the company as closely. Just quick glance, 35 PE. No thanks.
I want to bring it back to local. We've got a question coming, Drikus, who will stay with you. Murray and Roberts, I mean, they were really being smashed down. They've certainly bounced a bunch. Our president did say he wants to make our country into a construction site. Of course, Murray and Roberts don't have very much left in our country. Is Murray and Roberts on your list?
Yeah, unfortunately not. You're right. I do think there's other players. Maybe Roberts is a better one on the local construction theme. The problem is that most of our stronger or better managed or more, let's say, call it SA-focused property companies aren't listed anymore, or they've never been listed. So you don't really get pure play SA construction exposure like you did back in the heydays. I do like Avenge. I think Avenge has got a few options. They're going to separately list probably the Australian business. I think there's a value unlock, and then Woolmans locally, if they can turn a profit, it's worth something. And then there's a lot of cash on the balance sheet. So you're looking at something like 20 Rand plus a share for something that's trading sub 10 Rand.
Okay, so Venge would be yours. Wayne, Marion Roberts?
Look, if you're going to go for the president's promise of turning South Africa into a construction site, which of course we've heard from many politicians over many, many years so far, but this time around it may well be different. I agree with Drikus. I'd rather go for Raubex or Wilson Bailey.
Okay, Raubex or Wilson Bailey. What about Wayne Metrofile? I don't know if it's the stock you follow. I know them because, of course, they come and they take all the pieces of paper from an office and store it for you. They've had some challenges. I suppose the challenge is less paper, more digital. Yes. Metrofile, anything you're watching? Is there any opportunity there?
Look, I wouldn't. You're fighting against a structural change. I mean, I know they're not going to disappear overnight. I know there's a lot of paper still in this system, but it is in the decline. I mean, ask Sept. Yeah. You know, this is one of these truly structural changes. Data storage is so cheap now. You know, you don't have to buy your own storage. You don't have to. I mean, if I take my company now, up until, I don't know, 5-6 years ago, every month you got an email saying you must kill some old emails because you're using up too much space. Now it doesn't even matter anymore. You know, data storage is so cheap. People are just going to scan it or just ask for electronic invoices. So the last set of results were not good for Metrofile. So I would steer clear because I think this is one of those structural things. You know, it's like the printed media. It doesn't disappear overnight, but it's in a structural decline.
Drikus, Metrofile, because I used to get those emails as well, and I haven't worked in a corporate in years, but I mean, data storage is going electronic and cheap. Is there opportunity in Metrofile?
Yeah, as far as I know, they've pivoted the business a bit into the electronic space. So they are addressing some of those concerns. It's not a very cheap stock either, to be quite fair. You know, the last set of results were disappointing. So yeah, I'll give it a pass. Something else I do like that's a bit similar also in what we might call a sunset industry, or at least a much smaller niche type of industry, is Caxton. Caxton offers a lot more value, a lot of cash on the balance sheet, and they own 35% of Impact, which they might buy out completely. And Impact still, you know, does packaging, and packaging doesn't do too badly in the economy that we're in at the moment, or in the modern economy.
Yeah, Caxton's certainly one that pops up often, as you say. A lot of cash, that stake and Impact, and entrepreneurial management in many senses. Drikus, let's stay with you, because I know what Wayne's answer here is. Gold or gold miners? Would you be buying either at this point? Gold record highs, gold miners not quite so much. Is there still opportunity in the gold space, or perhaps it's hold on, or maybe it's even time for taking some profits?
Relative to the gold price, so I've been a gold bull for quite some time, even before COVID. But I think at these levels, the gold miners, and they've had their challenges. They've misallocated a lot of capital. It's really been difficult finding new low-cost, you know, sources of gold out there. They're difficult to come by these days. But just looking at the valuations relative to where the gold price, if you build a model and put in today's gold price, they're cheap as they've ever been. Some of those regions are legitimate, but some of them are just the market sentiment. The market equity investments does not trust the gold price. They don't see it staying here. That's basically what the gold miners' valuations are saying. You know, so I'd rather buy the miners here than follow the gold price.
So then, staying with you for a second, your preferred pick in the miner, local or offshore? Drikus?
Local or offshore. We own both. A few local. We own Pan Africa. We've actually cut a bit of that position. That's I think you know, value at these. If the gold price holds here, it's 10 Rand plus. You know, big if. If you're a gold bull, you know, it's worth maybe even more than that. But offshore, I think, well, even locally, Anglo Gold, so they're offshore basically these days. And anyways, Anglo Gold offers value. And then I think the two big majors, you know, even GDXJ, you know, the junior gold mining index, I think offers a lot of value there, because a lot of those juniors are going to be bought out by cash plus majors if the gold price holds around these levels. At lofty valuation, at much higher valuations. At premiums.
Yeah, we saw Ngligo Shanti go shopping in Egypt to buy a Tier 1. Easier to buy than it is to build. Wayne, what about Grindrod?
Sure.
The small little stock used to be a shipping stock way back in the day when I was living down in Durban. Now very much about Maputo Port. They're bringing some of their locomotives back from Sierra Leone, if memory serves correct. Opportunity in Grindrod?
Yes, I think so. I mean, no matter where Transnet ends up, it's going to take time. So there is opportunity. I mean, they've got a huge container, a huge dry bulk facility there, so they can handle coal, they can handle a lot. And there is a lot of traffic going through this. So yeah, I quite like Grindrod.
Drikus, Grindrod, I remember chatting with you, and we're going way back in time. Grindrod shipping, you were very big on. That's kind of played out, it's delivered on it. But Grindrod, which is now the ships, your take on Grindrod?
Yeah, well, back when we sold, it was before the unbundling of Grindrod Shipping and a few other corporate restructurings. We've made good money back then buying in when nobody was following it. So South Africans just don't understand shipping, and the shipping business was always, hidden within the larger business. So yeah, I think it still offers value. There's a bit of North Coast properties in there, north of Durban, but I don't know if it's worth anything. I think it's probably a zero, so I don't factor that in. But they've just made an offer. I think they're going to buy out the minorities from the Matola terminal. I think that's a big positive. It's a big asset. It's a great asset. And I do see us exporting still a lot of coal eastwards. China's burning more coal than ever. That's not going to change. They haven't got natural gas like the US has got an abundant source of natural gas. So they will be burning coal, India and China, for quite some time. And it's an infrastructure asset at the end of the day. That's underpinning most of the value of Grindrod. I think it's a much more defensive company now than it was 5 years ago. And I think it does deserve to trade on a bit of a higher rating.
Yeah, I take your point on that, Drikus. Let's stay with you. Pepkor came into the top 40 index on Monday, closed on Friday. Pepkor, their Brazil seems to be going okay. Their Flash is certainly doing well. Ackermans, everyone knows Ackermans and the other brands. Your take on Pepkor?
Well, what a business. We've stayed away for quite a while, mainly because they were opening a lot of stores into a weakening economy. But now, I think it was something like 150 stores just last year. It's incredible. But now that's going to pay off for them. If the economy starts expanding, if there's a little bit more in the wallets of consumers, if interest rates keeps coming down, the local consumer will look much better. And being the business that they are, you might see this one a bit higher in the months ahead.
Wayne, I'm going to pass you on Pepkor. We need to go to stock picks. Wayne, you're going with South African government bonds.
Yeah, look, I know there's been a strong rally in the last while. I mean, they've rallied actually very strongly. But, if things carry on the way they are now and we look a bit better and inflation, stays at 4.5%, 10% yield is still a 10% yield is still very, very good. I mean, that's 6 real. That can go down. I think, the long bond could go to 9. So you get a bit of capital appreciation. So, yeah, I mean, I know that it's already rallied a lot, but I still think there is more in the SA long bonds.
I take your point. Rates aren't bad, and you're still going to get potentially some capital appreciation. Drikus, you're going with African Oil listed in Toronto.
Yeah, so 2 big assets inside African Oil. The one is offshore Nigeria. Those assets alone, minus the debt, well, they haven't got any debt now, I'm lying. Net debt is 0. So that's basically $2.50. So it's trading at about 30% plus discount to only the Nigerian assets. And that, they basically valuing those assets at a very demanding discount rate. And then the other asset is located offshore Namibia, in the Orania River Basin. And basically none of the upside is on the books, from accounting perspective yet. It's basically, at book cost. And you've got all that upside. All the while they're sitting, buying back shares, with the cash that they have. They're paying a small dividend. So I see shareholder returns, from dividends and buybacks looking at double digits, low double digits, 10% maybe, going forward. Plus, you've got this big discount. Plus, if the oil price rallies back $10, you've got the upside, participation in the oil price as well. So that's one of the ways we're playing the energy market at the moment.
Okay, no, cool. I'd never heard of the stock before. Obviously, I know Toronto, but I hadn't heard of African oil. That's it for tonight's Stock Watch. Thanks to our guests, Drikus Combrinck from Capicraft. He went with African oil, listed in Toronto. Wayne McCurrie from FNB Wealth and Investments, going with South African government bonds. Up next, the close. Stay tuned.